We're growing more bullish.
Yes, I am. I simply listen to what the Fed says, and they have an unlimited pocketbook. They've made it clear they are going to overcompensate, Scott, and you're starting to see it happen right now. The beneficiary of this will be issuers of credit. We've issued $1 trillion worth of investment-grade credit so far this year. Spreads have tightened. And by the way, you know I watch the ETF market like a hawk. The Fed has only done a few $100 million of purchasing. It's just jawboning it that's getting it going. This is an extraordinary time. And if you're an investor and you miss days like today, you're missing 30, 40, 50% of the returns. We get these crazy volatility days based on Fed speak over the weekend. I watched that interview. I just said to myself, my goodness, this guy's going to come across as a genius by the time this is over. He talks such a quiet tone story, does very little with the dollars, actually. I know we've helicoptered some money in on PPP, et cetera, but this buying of junk debt, which is essentially supporting equities, he's done basically nothing. He's jawboned his way to this place. He's completely opened up the credit markets. We're enhancing balance sheets, and we're overcompensating. The only game in town is equities. Yippee-yi-yo-ki-yay.
Is it really that simple, Joe? I mean, Tony Dwyer has a note today that says this creates just a very clear risk-on view, the Fed and Powell.
Well, to Kevin's point, if you listen to Kevin's point, Scott, if you listen to Johnny Fine in the last 20 minutes on our network talk about what's going on in the debt markets, what Chairman Powell has enabled is companies, even like Boeing, to access capital that they otherwise would not be able to access in this stressed environment. So you've got companies that are able to rebuild their balance sheets, and I think that's lending a very supportive tone. But as it relates to the equity market continues over the period of 6 weeks to provide investors and traders an opportunity where you experience some form of a sell-off like we had last week, and you have the opportunity to take advantage of quality on sale. Now, coming into today, there are many people that are going to suggest to you, given the strength of this rally, that the right move to be making in the markets is to sell your positions. I do not believe that's the right move at all. I agree with what Kevin's assessment is. I think momentum right here is very positive. We're about to take out the April 29th high. We've got participation beyond mega cap technology. And I would urge investors and traders to stay with this as the market pushes towards 3,000. I think that's the target.
I go back to what Nelson Peltz told us the other day. To your points, Joe, about quality being on sale, he told us he put new money to work in the market. Now, we don't know what the positions are, but you're going to go ahead and make an assumption that they're of some sort of size. He doesn't normally, buy little tiny positions in things. So he told us he was optimistic on this country. He was betting on the positive coming out of this. He put money to work. By the way, he's had a pretty good history of making good calls in the market as well. In December of 2018, he made another one on this network. So Shannon, you have optimism from people like Nelson Peltz coming into a week like this where we get the Moderna news. Yes, it's early, but Powell underscoring the point there is no limit to what we can do. That is, I will do whatever it takes to keep this thing from completely falling apart.
Right, and the betting on America, is really a bet on free or cheap money. So the Fed's essentially providing cheap money. The U.S. government, through its fiscal stimulus, is providing essentially free money to businesses, albeit it's been difficult for all businesses to access that. And I think the Moderna news is just kind of taking what's been fear and loathing of this rally out of the market today. If you look at some of the comments from Powell yesterday, he acknowledged that while he expects a second half recovery, he does believe that, if we had to go back to the mandates that we've been living under for the month of April, that would create economic dislocation. And he was concerned about that. And so if we get, strength of the market on a potential vaccine, if we start to see a shift here towards, the belief that we really will continue to backstop through both monetary and fiscal policy the U.S. economy, I think one of the other things that I want to note here is that the fear from an institutional perspective is that if it goes the other way, if you're an institutional investor and it goes the other way and we start to see a decline in the market or a reacceleration of cases, you're concerned about the fact that, hey, listen, we've lost 36 million jobs. How could you be investing into that? Today, I don't think that's a sentiment. I think this momentum trade is going to continue this week.